As most of us know who are following the stock market, Janet Yellen is going to be the new Federal Reserve Chairwoman. She's going to be taking hold after Ben Bernanke is leaving, and we all know that Ben Bernanke has been tapering for the last 2 months. So we're going to see asset buying of roughly 65 billion. It was originally 85 billion, went to 75 billion at the end of December, and then in February it's going to be 65 billion. And now we have to see what effects are going to happen around the world. And we could just take a look at some charts right now and see what's going on in the Dow. Alright, this is a daily chart of the Dow Jones Industrial Average. We could see that the Dow topped off at like 16,600-ish in December, roughly around that area. And we could see it right now around 15,700. And we've seen many distribution days, right? A cluster of distribution days. So some traders say that, hey, that's a red flag, but who knows? That could reverse. It doesn't mean that it's set in stone. We shall see how the international markets react. If the international markets continue to struggle, right, the emerging markets, Turkey, South Africa, India, China, list goes on and on, other BRIC countries as well. If you see problems in their currency markets, guess what? I wouldn't be surprised if the Dow goes back below 14,800 relatively soon, right? That doesn't mean that I'm going to be right, but if the problems in the emerging markets are not solved, then I believe that we're going to face some difficulty in the months ahead, unless we see companies beat earnings. And we're not seeing great earnings. I've outlined that before. I mean, Sears hasn't done well, Best Buy, Bed Bath & Beyond. There was Amazon yesterday. That's a big firm, right? And when you start to see firms like Amazon miss earnings, and which compose of a huge percentage of points of the NASDAQ, in my opinion, that's a red flag. But that doesn't mean that I'm going to be right in my assessment. It just means that I'm starting to see cracks in the system. And then people are telling me that, hey, guess what? Okay, yeah, the stock market could go down in the short term, but guess what? If you have Janet Yellen, and even my dad said that to me the other day, the stock market's not going to go down, and the reason is Janet Yellen is going to provide so much stimulus. He didn't know the name of the lady, but he said that lady is going to provide a lot of stimulus. And I've seen the comments as well saying that, hey, the Federal Reserve is going to be behind the curve, and we have probably 1.5 years. I was thinking that earlier too, but let's try to look at some charts from the past, and let's try to see, I mean, we could go back and forth in the comment section to see whether or not we're going to see the stock market go up. Once again, these are my own thoughts, and remember just to do your own due diligence on your own portfolio or trading patterns, whatever, or your trading. Now let's go to another chart right now. Alright, so right now I overlaid a chart of oil prices and the Fed funds rate. And if you want to look at what happened during this time frame, people were saying that, hey, guess what? If you have, let's just look at what these graphs are first of all. Okay, in the blue, it represents the Fed funds rate, right? You could see that on this side here, right? And if you want to look at the red, those are the oil prices, okay? I don't have the Dow overlaid against this, but we could just look at it from this perspective though, okay? A lot of people were saying that when the Fed funds rates were around here, right? It must have been like 5.25 or something around there. And for some reason, when these rates went down, everyone was saying, hey, that's going to be bullish for the stock market. There's more liquidity. Bernanke's increasing the money supply, and that should be good for stocks, right? Initially, the knee-jerk reaction was up until October of this year. You see, right? I don't have the Dow overlaid, but that's when the Dow hit a high of like 14,100, 14,200, right? But after that, there was a slow but steadily decline in the Dow Jones Industrial Average, just as you saw with the Fed funds rate going down. And if you want to also look at another reason, or why did they want to lower the Fed funds rate? As I've mentioned many times before in graphs, there were problems in the credit spreads or the credit markets, especially in the United States. The 3-month LIBOR and overnight spread, right? They usually had a 10 basis spread differential. Now, or in 2007 when subprime was blowing up and with the problems with the Northern Bank in Britain, I believe, those spreads went up to like somewhere around 70 to 100 basis points, and that was showing stress in the credit markets, and this is why Bernanke freaked out, right? And notice though, if you saw the Fed funds rate going down, right, you saw oil prices going up. That was a headwind in the economy. I mean, you had a lot going on. You had subprime blowing up, and in addition to that, many people couldn't pay their real estate bills, or they're falling behind because the real estate bubble burst in around 2006. And when you saw oil prices go up, right, people had to pay more at the gas pump, and it reached some problems around like summer of 2008. I mean, the graph that I'm showing you right now shows averages of prices per month, okay? I mean, oil prices technically got to like 144 on the high. So these are just averages, but still, you could see oil prices were this high, and you could see Fed funds rate were this low. Everybody thought the extra liquidity in the economy would be beneficial. So now what happens if Janet Yellen decides to say, hey, you know what, we're not going to taper, right? What's going to happen? I mean, could we see a scenario where we see oil prices go up like this? And if oil prices go up like this, you know what? That means that other countries are going to have problems. So suppose that Janet Yellen extends stimulus around the world. Or, I mean, says that, hey, we're not going to taper. Initially, the knee-jerk reaction may be the stock market goes up, all green shoots ahead. But at the end of the day, if you see higher oil prices, that means other countries are going to say, hey, hold on a second. Or the people of the other countries are going to face higher inflation because they have dollar pegs, such as in the petrodollar countries, right? Or these Arab countries. If you have more money printing, right, as Janet Yellen may do, then they may throw a fit. If they throw a fit, what will oil speculators do? I mean, suppose you have Arab Spring 3.0. That could make oil prices go higher. Once again, this is not a guarantee, but this is just one scenario going on in my head. Because it's one thing, if Janet Yellen continues to see stress in the stock market and all these indices, she may cave, and she may say, you know what, we're not going to taper, we're going to increase the liquidity. One of the consequences that I'm thinking in my head right now may be higher oil prices. Just when Bernanke cut the Fed funds rate, one of the unintended consequences, which but which also played a role in the 2008 crisis, was that people were getting tapped out. They had to pay higher oil prices. They were experiencing higher inflation. So this could be one scenario that we could see. I wanted to ask you guys. So some of you guys are saying that, hey, guess what? The Federal Reserve is behind the curve, and as a result, hey, we're going to see a higher stock market because of that. We have 1.5 years left. But then one of the consequences may be higher oil prices, and that may be, I don't know when we could see that, but I could show you some other charts in another video. And I'm thinking 2015, 2016, we're going to see new highs in oil prices. Once again, not a guarantee. And also another disclosure, I'm still planning to trade around oil prices even though I'm doing this video. I mean, I was planning to put on a short at $100 a barrel for oil, but we didn't see that level. But just as a disclosure. So what do you guys think? Leave your thoughts below. I'll talk to you later. Bye.